Hello, everyone. Welcome to How to Trade. I'm Shane Vernier, and this is the U.S. Open. Today, we're going to be looking at finding our weekly opportunities. We've got a few trades lined up that are going to be pretty good. Put a trade idea out a little bit earlier, and it sort of stems from your weekend news cycle with the U.S. deciding to bomb Yemen and launch large-scale attacks against the Houthi rebels. A lot going on in that region. It's provided a little bit of bullish price action for U.S. oil. May, in fact, give us an opportunity to sell. I'm pretty bearish U.S. oil right now, and if we do get a pullback to a key macro resistance zone, then we'll be able to get in there and really nail it. So I'm happy about that. Not about the bombings, of course. No one's happy about that stuff, but I am happy about the price action we're seeing in U.S. oil. Going to give us a chance to trade. Right now, let's get out to price action. We've got the U.S. 30. This is our 920 crossover. We've got sort of the conditions here potentially to trade a little bit of a crossover strategy. So remember, we've got our codes. We've got our coded script here that's going to show us when to do it. 5-minute chart. You can get away with that right now trading the U.S. 30. We're shortly after the U.S. Open. You've got a lot of volume. You've got a lot of volatility. So right now we're looking to grab that crossover. We're looking for the 9 to cross under the 20. Then we're going to sell this market. Why can we do that? Because our RSI has a sort of an overbought territory. We're looking on a sell there for that 920 EMA crossover. So a lot going on here. Let me see incognito mode. We're just sort of rocking on, seeing what we can do here early in the morning on a Monday. Typically, my Monday strategies are very, very conservative. I don't like risking a ton of money on a Monday, and the reason why is because, well, quite frankly, the week's just getting started. We don't really have viable ranges just yet. We may work an opening range. A lot of you love the orb strategy. I get more feedback on the orb strategy probably than anything, except for the 9 EMA and the 920 crossover. So we're going to talk orb here in just a little bit. Maybe we can get a trade going there. But I am watching that U.S. 30. It's been really a big-time comeback over the last, Friday was a big bullish day for whatever reason. Today we had really some ugly retail sales numbers, some revisions to that, and everybody's talking recession. So recession. So good to see everybody back. Mark B, good to see you. Bobby Bob, always a pleasure, Bobby. All right, guys, let's go ahead and get on with the program here. This is our trade follow-up here. Issued this one just a little while ago, about an hour ago or so. We put this one out. I wanted to get this out right at the beginning of the week, and because, like I said, that weekend news cycle was absolutely really a banger for WTI. We're up just about 1%, somewhere right in there, about 0.5%. We were up 1% earlier. Trading about 67.48, somewhere in there, 67.50. We've got a real key level up there, a nice big resistance zone on the weekly. So if you do get an opportunity to sell right up there around 69, I believe we put in 68.89s are our sell. I like selling in front of 69. So if we do get a chance to sell that early in the week, I'm taking that all day long. We do have a big week of economic data and things going on, though. So let's go ahead and get out to this trade. And you'll see right there, 69.03 is going to be your weekly 38% retracement. It's tough to not be bearish right now, even though we are headed into bidding season. Remember, we typically go with a bid really starting in the second week of February. The last few years that I've been on calling this market, we've done fairly well. I will say this: I was waiting for a big rally both years, and we didn't really get it. We really haven't hit that $100 per barrel mark that I thought we were going to get over the last 24 months. We came close. We got a big rally, not last fall, but the fall before. We got a big rally there, right up to in the 90s. But since then, it's just been sort of dead. We've traded. There's been a lot of business, but you can see these ranges, these weekly ranges. We're just sort of going back and forth. We really haven't done anything. Nothing like this back in 2023 where we saw that big rally. That's pretty much what I'm talking about, up there to about $95. Since then, we've traded, inside of that range. So even though the price action's big and we take leverage positions and, everything's, the volatility of crude oil, I tell you what, I'll pull a chart here back in 2011. That was volatility. This right here, this really isn't that volatile at all. So I'm watching this closely at 69. I think we could sell 68.89s all day long and get away with it. If in fact you do that, be sure that you watch your risk, especially going into Wednesday. We've got a lot going on this week's trade. If you're going to be trading, remember, and you need a broker, check out Switch. Switch Markets will get you up and running with everything you need. The 100% credit bonuses, there's giveaways, there's contests, pretty much everything you want to do as a trader. If you're in our international audience, meaning you're not located in the United States, check out Switch. And like I said, there's going to be some big news on the Switch Markets front coming up, and I'll let you know when that does happen. All right, week 12, 2025. This is a big week. this is a big week. I mean, if you're a central banker fan or if you're a banking aficionado in general and you want to know what monetary policy is going to be really facing the U.S. dollar, the Japanese yen, the Swissy, I mean, all of it, the pound, it all happens this week. So right here today we have retail sales. That's going to be our fundamental of the day. And then we've also got a real quiet Tuesday session. Wednesday, BOJ FOMC announcements. We're going to have FOMC live for you Wednesday afternoon. So be sure to tune in there and we'll give you the entirety. We'll give you the entirety of Jay Powell's presser. We'll critique it. We'll go through it. We'll take a look at some live markets and see if we can maybe nail a trade or two. And then also your S&B BOE interest rate decisions. Those are coming Thursday. So if you're serious about Forex trading and you're a Forex trader, be careful. If you're trading the yen beginning Wednesday, you've got to be smart about what you do because the BOJ is wildly unpredictable right now. That's going to come across the board Tuesday night here in the United States, but that early Forex session Wednesday, the BOJ, there it is. Look out. FOMC announcements also on Wednesday. That's going to be a big one for the Fed. We're going to have that live for you. In any case, Thursday, S&B, Swiss National Bank, has a mind of its own. Nobody knows what the S&B is going to do. We're not expecting much out of these moves, but the BOE interest rate decisions, there's a lot going on, guys. And then Friday, it's just a no-donation Friday. You're going to throttle it down with no real key economic events and see if you can preserve a little bit of capital. That's absolutely huge because you want to be ready to trade next week. If I was going to give anybody any advice, is this week the week where you try to make your monthly nut or your yearly nut? I would be very careful. Because this right here, these 3 days these 2 days, that 48 hours, Wednesday, Thursday, it's going to be incredibly choppy. So be careful. All right, let's get back out of the US 30 here. We're sort of waiting. This trade is simmering, it's like cooking a big pot of soup. You get all your ingredients in there. Now you're letting it simmer, and you can't eat it until it's ready. And, if you're a chef or if you work in the kitchen or understand really anything about culinary expertise, it takes a while for those flavors to meld. You want to see all those flavors sort of coalesce and come together before you pull your soup and serve it. And right now, we're not getting it. Right here, we're in sell mode. We want to sell. I just don't know that we're going to get this on the US 30. Let's step back. Maybe the US 100 is a little bit better for us. You can see we were in overbought territory there, and we were looking to sell something like this. It's not real great. Sort of starting to flatten out here. We could get hurt doing that. US 500, I would say the US 500 or the US 30 would be a 5-minute crossover play that I would consider, especially this early in the week. It'd be very, very minimal risk. I want to see these markets set up. That's the idea here. Let me see. Haymu, good to see you, Haymu. Welcome. Good morning, good evening, good afternoon, wherever you may be. Adnan, good to see you, Adnan. Thami, absolutely, guys. Good to see everybody back in the room. So as far as this trade goes, we're going to stick with the US 30. I think that's going to give us our best chance to succeed. And, I'm sort of macro bearish on stocks. Does that translate to a 5-minute chart? Not really. I mean, I'm not going to sit here and pull a weekly chart and tell you what's going to happen on a 5-minute chart unless we're trading a key level. Big time trade here, though, potentially, if we do get that set up, and we just got to get that crossover. Right now, you see the width between the 9 and the 20. Sort of suggests that we may not get it. Okay, gold. Gold's a big one, and we talked a lot about gold last week, and we had trades on, and you can see that 3,000 level is huge. Let's get. That was our entry point. We got a beautiful little scalp there for $10. It was a tester though. It tested our resolve, but it was a good trade. One of those trades that you really can't pass on. You got to take it right there. 3,000, Mr. 3,000. I mean, that's the game, guys. I mean, that is the game in gold. There's no question about it. As far as what would I be looking to do, you can see exactly what happened here today. We rallied up. We checked 3,000. The sellers dominated from there. That's another strategy you could probably get away with. We built that into that key levels video. That's what you want on that. When you're looking for a key level, big round numbers, all-time highs, something like a 3,000, there's going to be a fight there. There's going to be a fight, and that's it. That's all we were talking about. We said, well, we got to see a little bit of a fight. There it is. So if I'm trading gold, this right here, I am very cognizant of Friday's range. In my view, Friday's range is the most important technical there is in gold. It encompasses 3,000. It shows you the rally and then the sell-off. Be very, very careful with this range because it's important. It's going to draw a lot of participation to the market. So right there, I'm looking firmly at last Friday's low. Last Friday's low is down there at 229.7855. You're probably going to be looking to sell and play the washout underneath last week's low. There's a breakout under there, more than likely. Do you get it today? No. You don't get it today. We're going to rotate. My guess is I would be extremely surprised if we do anything outside of Friday's range today. I think this is a great range trade. The 3,000 sells that a lot of guys got earlier today, stop out point clearly was up above 3,005. That was an easy trade. A lot of folks got it. A lot didn't. That's okay. Two levels you've got to watch. You've got to watch Friday's low, and you got to watch Friday's high. If we do, in fact, break above that Friday high, then you sort of have to be playing on the bullish side of this market, and you have to be fairly aggressive. So I'm watching this one closely. As far as what I think is going to happen to the gold market, I would be surprised if anything happens right now. I think we're going to trade sideways. You're going to see the buyers and the sellers sort of debate what an ounce of gold is worth. But 3,000 is the catalyst. 3,000 is the catalyst for the action. And right now it's drawn sellers. It's not drawn buyers. You have to treat it as topside resistance. But, and that's a big but, if we break above Friday's high, then we go right down to a 4-hour chart. We draw Fibonacci retracements, and we look to buy until we see a reversal. So right now, I would still, if you're holding shorts, I don't blame you. I know where you're going to get pushed out of the market at more than likely is going to be right up around 3,005. But this could be an intermediate term, sort of a swing top that developed Friday. I'm watching closely. If, in fact, this gold sets up as an inside bar, be careful. Look out, because you're going to get a breakout. There's no question about it. If this was to trade inside, I would be watching today's high very closely, potentially a breakout to the north. And, in fact, you could even start saying, we might get a breakout to the south as well. And, of course, I want to buy discounts. If we can get a discount down here at 229.56, something like that, then we just bid it and don't worry about it. That's a winning trade. The question is do we get it, and can we get it anytime soon? I don't know. But I know that it's good trading right now. If you got a 3,000 sell earlier today, that's good stuff. That's well done. That's range trading. That's rotational trading. I'm going to be honest with you. That's a pro trade. That's a professional trade. I mean, a lot of people are going to step up and say, Shane, it's really the strategy is to sell 3,000. I go, guys, you don't understand. 3,000 has the entire world debating it. Like we talked about Friday. We talked about gold for a long time. And that's everybody's on the phone right now wondering, okay, is gold at 3,000 or not? Well, I think 3,000 could be a top, but I'm not holding shorts. I'm gonna watch and see what happens and trade it accordingly. My personal trades, I'll be looking for a washout underneath yesterday's low. If we can, in fact, get that, I think that's pretty much a lock for 15 or 20 ticks, big-time washout. This area right up in here, though, this zone, I can't stress enough how important that range is in that zone. I'm watching this closely. Marco, I'm good to see you. A little bit late on parade. That's all right. If you're a little bit late, the only one that can't be late here is me. Check us out in the past streams. You can catch us on demand. All right, everybody, we got a fundamental of the day we need to cover here while we're waiting for one of these trades to set up, and it's retail sales. Retail sales, interesting numbers today. It's all about recession. Recession. That's all it's about here in the United States right now. And what does that really mean? It means that are the tariffs going to hurt the U.S. economy? Is inflation under control? Is the Fed going to raise rates? What's the global trade situation? Geopolitics, Russia, Ukraine. Is there a ceasefire there? We've got new airstrikes against the Houthis in Yemen. What's going on? Well, I mean, theoretically, all that stuff will figure into a recession. All of it. If you put it all together and stir it up, it's a recession. So the world right now is wondering, is the U.S. going to go into a recession? That's the number one thing on the tip of everybody's tongue. You've heard Trump sort of allude to it. The Treasury Secretary, we talked about that. Bessent, whatever his name is. We covered that Friday about how he said, hey, listen, we'll take a little bit of turbulence in the stock market. Corrections are healthy. We'll see. We'll see what happens. Retail sales today, though, did not look good. Let's see. Retail sales are in. Retail sales measure the change in the total value of sales at the retail level. That's it. Just think consumption. The rest of it, don't worry about the rest of it. Think consumption. All retail sales mean is that I'm buying things and you're buying things. And as long as we're all buying things, the economy will grow, theoretically, unless you get an outlier event, and we'll be talking about those as they happen. Are tariffs an outlier? A lot of folks believe so. I don't know necessarily just yet. This is what happened earlier today. Now, it's very rare to get a retail sales figure or really a 3-star, a 5-star market moving event on a Monday. It's rare. It doesn't happen very often. Usually we get some ISM figures, some PMI numbers or non-PMI numbers. Those numbers don't move markets. Those are for the economists. Those are for the financial analysts. Those for the people that just want to sit around and write stories and have a piece on TV where they got to fill up a segment on TV. That's what those PMI numbers are for. They mean nothing. They really do. They're academic numbers. We can look at them. We can evaluate them and say, okay, what do those really mean? Yada, yada. They don't mean anything. Retail sales sort of, really comes back to what we think about consumer confidence and consumption. Consumption. If consumers don't feel very well, then the consumption is going to come off because people are going to be sticking their money in their mattresses or under their pillow or burying it in their yard. I haven't spent any money for a long time, no real money, and I don't intend to spend any just yet. Maybe towards the end of this year, we'll start talking about buying some big purchases, but right now, no way. So I'm looking at this right here and I'm saying, okay, what does it really mean? The biggest thing that happened today was there were some downward revisions to previous retail sales numbers. Now, the reason why those early year retail sales numbers are big is because you're just coming off the holiday season. Typically, you see a lull in January, and it's just a question of how bad the lull of consumption is. Everybody buys everything for the holidays right ahead of New Year's. It's pretty much a spending spree, but January is typically a hangover month. Well, what happened? Well, you saw these would be January's numbers. These are February's. Look at January. See these reds? These red figures? They went through and they revised the report down significantly. So what do you have? Core retail sales, basically that's retail minus a few more volatile categories. We're not going to get into the differentiation. Core, though, came in at 0.3 as expected. That was a little bit better than the downward revision in January. So theoretically, that shows maybe an uptick in consumption. But retail sales itself came in at 0.2% for February, well beneath the 0.6% expected, but better, a lot better than January, which was down, revised downward negatively. So big picture, what does all this mean? Not a tremendous amount. Now, I've heard the recession word a lot today, and I'm surprised. But right here you go. Retail sales in the U.S. increased 2.2% month over month in February, rebounding from a downwardly revised 1.2% fall in January, but well below forecasts. 7 of the reports, 13 categories saw declines. Foods and services and drinking places, it's because everything's really expensive at restaurants and bars right now. Gasoline stations, gas, I would take that with a grain of salt. It's wintertime. Clothing, motor vehicle parts and dealers, sporting goods, hobby, I'm not worried about any of that. The big thing that I would say is, does that suggest that we have lagging consumer confidence? If your consumer confidence ducks or if it falls, you're going to run into trouble with consumption. And as soon as consumption decreases, you're going to see a pullback or an economic contraction. That's the way it is. That's basic economic theory. That's pretty much how the markets sort of price things in a lot of ways. Growth, everything goes up. Contraction, everything goes down. The idea that consumer confidence runs the whole show is in part true, and retail sales are a sort of a prime, I would say, a number that we look at for consumption. No question. Take a look at that downward revision in January. That's ugly. But here's the thing. Did that drop in retail sales, was that because of the tariffs in January? No. Tariffs hadn't even gone on yet. Was it because of the election and the changing of the garb? I don't believe so. I think you're more inclined to believe that these numbers, maybe those were just shaded a little bit to the top side to make the previous administration look good. This is nothing new that I'm talking about, believe me. That right there, though, pretty big plunge, big time downward, really a downward move in consumer confidence. So we're going to talk recession here in a minute and run a few things that you may want to see. As far as our Euro USD, that's going to be really one of our key trades for this week. This is a trade idea that we put out Friday, and I'm going to go over that in just a second. So we got some questions here. More than happy to answer any questions if I can. If I can, I'm going to say no, I don't know how. All right, Mark B. Are the central bank purchases of physical gold finally putting some strain on the derivative side for true value, or the moves just inflation adjustments? I think you have a lot going on in gold, and you're absolutely right about how much gold is being acquired, not just by central banks, but companies. They were talking the other day about BlackRock buying huge chunks of gold and taking physical delivery. They were talking, the guys that I was listening to, they were talking about actually having to bring in a ton of gold to put at the COMEX COMEX Gold futures, because a lot of folks buying this on the futures market are going to take delivery. And it's something that they haven't seen in a long time. And they're going, wow, everybody's taking physical delivery on gold. It's a fascinating question. So your question is, are the central bank purchases of physical gold finally putting some strain on the derivative side for true value, or the movement's just inflation adjustments? It's a great question. It's a complex question. What I would say is this. I don't really know that the physical market influences the derivatives market. I think this is something where the cart pulls the horse. I think the derivatives markets are actually influencing the physical markets. And what I mean by that is the way that they've been bidding something like gold futures, which are up big. I mean, let's just go right back over. Let's pull a gold futures chart here, which is trading at 3,002. You can see the big rally, definitely a washout potential beneath Friday's low. But take a look at the monthly here. Okay, there's no question about this. This is April gold futures, and this one's been open for trade since October of 2023. And you can see that this went from 2,100 to 3,000. That's a tremendous rally. Now, what I would say about the relationship between physical delivery and the derivatives is, if in fact you're bidding gold to be worth something more at a later date, what kind of pressure does that put on the gold suppliers? So let's say I can buy right now at 3,000, and a lot of folks in the derivatives markets believe that gold's going much higher. Let's take a look exactly at the contango and the backwardation. It's a great question. It's complex. It's a great question. I think it's I think it's the other way around. I really do. I think the derivatives market are putting pressure on gold suppliers. And I think they're really not destroying, but they're really questioning the integrity of the spot markets, but also wholesalers. What about wholesalers? Remember, you can't really get gold at spot. I mean, you can buy these derivatives products, you can buy the Forex products and gold futures, but you can't really get it at spot. So you got to buy it at wholesale. It means you got to go through a dealer. Now, that's really tough. That's tough to get any good pricing at all. A lot of folks get tricked into buying things like gold coins and collectibles they charge a premium for a supposed collectible as opposed to buying the bullion wholesale. I believe that the derivatives markets are influencing the spot. So the question is are the central bankers and the BlackRocks of the world, are they getting a good deal on stockpiling physical gold? The only reason you would stockpile physical gold is what? If you believe price is going to keep going up. So right here, take a look at where we're at here. Now, typically when we trade futures contracts, the price of the later futures contracts goes down. Why? Because a bird in the hand today is worth more than it is tomorrow. That's just the way that typically we price things. Well, look at what we got here. June gold, 30.27. What is December gold? One of the most heavily traded contracts throughout the year, 3,100. Powers that be see the price of gold going up. That's reflected in these derivatives prices. See what I'm getting at? They're taking physical delivery because they believe that the prices are going to continue to rise. That's reflected in the derivatives market. So unless we see a mass sell-off in gold, and essentially maybe more of that physical gold being given back to the exchange or sold on wholesale markets, I don't know that anything stops this rally. I really don't. Tighter policy. Hope that helps, Mark. Great question. Hard question. Definitely a hard question. I mean, when you start talking about taking physical delivery over holding paper, that's mass investiture as opposed to just trading like we do. So something to think about there if you're interested in that kind of stuff. I always find contango and backwardation in the gold markets to be absolutely fascinating. It's fascinating across the futures markets. I always like to see what people believe something's going to be worth as opposed to what they think it's worth right now today. I know what a stake's worth to me right now today, but in 2 years I might not be able to get a stake. So maybe I pay more to make sure that I have a stake in 2 years. Beautiful questions. In any case, right here, Euro USD, this is going to be another trade idea for later this week. Remember, we don't have the ECB, but we do have the Fed. Absolutely love this level right up here, right around 110 even. I mean, that's another big key number, 110 even and 109.92. I'm looking to sell right up here. I believe we have 75 sells or something like that. So this zone right up in here is where we're going to be looking to take a shot to the short. I think you're going to get a nice compression, a nice reaction here. I'm at that monthly 78%. That's a huge level for a couple of reasons. The first reason It's a 78%, but the second reason, it's 110. Big round number, monthly macro retracement level, resistance zone in play. What else do we have? We have some market drivers this week. The market driver will be the Fed. I love the way this is setting up. Preferably going into the Fed meeting, if we could be maybe trading right around 108, maybe 109, 109.50. We'll get a pretty good chance to get that on the meeting. So I'm really excited about that. And we'll talk about this pair later on in the week too, because we did have a buy. I sort of broke down, reverse engineered a buy for you and showed you how that a lot of these levels really line up. That's not a candle. That's one of our old bullish flags. But something like this, you'll see we pulled back beautifully to that zone and really set up a great long from an area that was a pretty good compression zone. 62% on your monthly was about 108.17. We broke and came right back down and then launched again. That's something we're going to look to do in the gold market. Once we break up over 3,000, we're going to look to get involved to the bull, but I want to see that break first. Until I get the break, I'm kind of cautiously bearish there, but this is a great example of exactly what you can do with support and resistance levels. You don't just have to sell them or resistance. You can buy them as well. Right there on the 4 hour, you can see we broke, we pulled back, got a great look there, then a nice rally and another level there. So if you wanted to buy the Euro USD, something right down here maybe, 108.20, I would wait for a pretty good strike of that zone, but 108.20 and then maybe selling up there right in front of 110. There's trades to be had here. This is sort of our happy zone. We're looking for resistance to the top and support to the bottom. So the Euro USD is definitely in play. Definitely in play, and you're going to want to make sure that you're watching that one closely as the week wears on. All right, so that's a pretty good one. Let's go ahead and look at the dollar Swissy as well. Remember, the Swiss National Bank is going to speak later this week. We've got all sorts of key analysis and all that stuff. You can see it looks like we had a daily 62% sell. That was pretty good stuff. Right there, nice big plunge, pullback, 62%, bang, came off big, so not too bad of a thing. We were working a crossover on that, a 4 hour crossover. That trade went very, very positive for a while. Right now, I think it's back down to right around, you're down a few pips. So it's, for me, I mean, if just looking at what I look at, you got a bearish setup here. So if you're looking at the Swissy, I would back this thing off to a weekly chart, and I'd say, okay, what's going on here on the weekly? Okay, you got a nice big run, nice swing high there, nice big break, compression, sort of a failed auction beneath that low and a rally. So what could you really do here? Spike high there. Spike low there, 89.25, something like that. So if you've got 89.25 as a potential sell, and we're a ways off of that. You're at 88.17. But if in fact you do get that break, maybe on the Swiss National Bank or the Fed meeting, that's another one of this week's top opportunities. There's no question about it. No question about it. Let's see, Mark B. Very interesting. Historically, it has been assumed that there was a derivative fix in the market. So for the derivative to be the driver implies someone's not playing the ball and all bets, not playing ball and all bets are off. I think so. I mean, the biggest thing that I would say, Mark, that scares me about the gold market is that we should be seeing backwardation. We should be seeing backwardation in the gold market, and we're not seeing it. And the reason why is there's a risk premium on those deferred month contracts. Essentially, they're pricing in geopolitical instability and dovish policy, dovish Fed policy. Otherwise, you'd see the flip. You'd see, okay, $3,000 gold today and maybe $2,950 gold in December. Either way, it's not a huge move. 3,100 gold in December. I mean, that's 100 on 3,000. I mean, what is that? I mean, just off the top of your head, 100, divided by 3,000. What's the risk premium there? 3%. It's about right. 3%. Remember, institutional investors and venture capitalists will basically kill for a 7% return. So half of that on a gold bet, seems to be a reasonable premium. But yeah, I hear you. A lot going on. Conventional wisdom tells us a lot of different things. When you take delivery and take a bunch of gold out of circulation, or just sort of corner it into one or two holders, we already know production's down globally. We're not real big on getting production out of conventional sources. So that's one of the reasons why you see gold up, silver especially. But it's complex. And then we can get into all the different folks. The Saudis are trying to stockpile gold. China's been stockpiling gold for years and years and years. So you really do wonder, Russia. Who knows? Maybe maybe Russia gold comes online at some point in a big, big way and drives prices down. It's hard to say. I think that there's a lot of folks that just took profits at 3,000, though. I really do. I really do. All right, last thing we got to cover here is going to be our recession, our talk about recession. This is it. This is what we've seen all today. The last few days just been recession. This is an article out of the BBC. A JP Morgan report put the chance of recession at 40%, up from 30% at the start of the year, warning that U.S. policy was tilting away from growth. Well, Mark Zandi, chief economist at Moody's, upped the odds from 15 to 35% signing tariffs. These guys are smart. If you're working for JP Morgan or you're working for Moody's, clearly you have a track record of being somewhat intelligent. I believe jacking the rates, the odds of a recession, 40% because of tariffs. Come on. They don't know what the impact of the tariffs are going to be. Everybody's got to guess. We'll see what happens. For me, though, the key right here, a JP Morgan report put the chance of a recession at 40%, up from 30% at the start of the year. It means that the smart money already had us going into a recession. There you have it. One last thing. Let's go ahead and ask ChatGPT. What are the chances of us going into a recession in 2025? As of 17 March 2025, the assets of likelihood would vary. JP Morgan gives a 45% chance. Interesting. The Securities Industry and Financial Markets Association, between 15 and 30 statistic presents a 30.5%. So there you go. We're probably right around 35%. So does that lead to rate cuts? Do we have an opportunity potentially to cut rates or get some rate cuts to stave off a recession? I doubt it. Maybe not. We're going to find out. And once again, there's your 5-minute crossover there. Let's do a real quick exercise here. Let's go 15-minute. Let's go with a 15-minute. See if we got a 15-minute orb here. Right there is going to be your first 15. There's your second 15. So if you're trading the US 30 and you're interested in trading an orb strategy, an opening range breakout using that 15-minute chart, you guys know the rules. It's real simple. There's your opening 15-15. What you've got to do is either get a bar close above, outside of that range, above that, or beneath that range, and then you're just playing the break. You're playing the break until then. You can see right there in the U.S. pre-market during that overnight, you got a crossover there. That's working relatively well. So potentially, would you want to maybe get long here on a breakout? It's possible. It's definitely possible. Calvin, good to see you. Gold's stuck in the range. Yeah, we've been talking about gold all day, Calvin. That's for sure. I think that you're going to see gold really rotate around 3,000. If you're looking at any numbers at all, they'll be looking at Friday's highs and lows very closely, especially the low. There's a lot of longs dug in. They're going to stop themselves out underneath Friday's low. And also the shorts. A lot of shorts have dug in today at 3,000. My guess is they'll hold till 305, and then they'll get forced out. That's when the break comes, and then we look to really scale in and get long and play a big-time rally. Personally, I want a little bit better deal before I buy gold with two hands of money. Absolutely. Could be a Hunt Brothers. I mean, it could be anybody right now. We do know that the silver markets have been manipulated for years and years and years by the likes of who you're talking about, Mark. So I always lean towards manipulation in silver, but a lot of folks believe it happens in gold too. Gold market's big right now, though. A lot of people are buying it. A lot of people are playing it. All right, guys, that's a wrap for me today. Remember, we've changed our stream schedule, so we're going to be going 3 times a week this week, maybe twice next week. We're just going to wait and see. The next live stream that you're going to get this week is going to be FOMC Live, and we're going to be doing that on Wednesday afternoon, so be sure to tune in at about 12:20 my time, 2:20 Eastern, and I have no idea what time that would be in the Netherlands or in Australia or or in the Asia Pacific region or even in Europe. So you'll just have to check your local listings for when the Fed pressure's on. But I'll have all that coverage for you live. We'll trade it. We'll analyze it. We'll heckle Jerome Powell. We're really looking for signals out of Powell about how he feels. They threatened to de-charter the Fed. We've seen those threats before. That bill is headed for Congress. It's already been introduced. Who knows what's going to happen? All right, everybody, have a fantastic trading week. Business is due to pick up tomorrow. Interesting stuff, though, here. I'm interested to really get it on this week. Remember, 4 central bankers are getting into action. Be careful. Be careful. Watch out for choppy price action. All right, guys, I'm going to go ahead and sign off here for a while. You have a fantastic trading session. Trade the action well, and we'll talk soon. See you.